Hey, good morning, everyone. Marty Mazura, Wednesday, June 1st, 2022, with your midweek market snapshot. 2.5 hours after the market opened, and we went from nicely positive to start the session to notably negative. S&P's down 1.3% as I speak. So wanted to spend just a couple minutes and update the charts that I've been showing you here the last few weeks. We'll do it backwards today. We'll start with the longer term charts and move to the 60-minute chart. First of all, though, this is that NASDAQ composite weekly chart. And recall a week or two ago, we went back 30 years. And I showed you that when we are oversold, which is below 30 on the relative strength index, on the weekly chart, every single time over the last 30 years, we got a pretty noticeable bounce. The worst of all those occurrences being a 14% bounce off of the bottom at the time. And so far, we're looking at about an 11% move, 10.89% off of that bottom. So if this is all we get, this will be a confirmation that the signal was legitimate. However, this would be the worst bounce of them all over the last 30 years. Now, it does look to me very much like one of these bear flag patterns, although I do still believe that it could have a little further to run. But on the weekly chart, this is more consistent with that, that bear market action that we're talking about. This would be, your counter trend rally, and then what you would do is you would take the length of this flagpole and move that down to get to your new target. And we'll look at that here in a second on the S&P 500 weekly. So again, we'll see how this plays out. This would be, the counter uptrend still intact on a weekly basis, but you can see that market's really struggling so far this week. And again, this is the NASDAQ Composite Index. As for the S&P 500 weekly chart, recall that we had this, bear flag. This isn't your best flag pattern. The actual flag itself is a little too big for me, but if we continued with this kind of action, that would take us, a snapback along the lines of this would take us right back to really what was our target on the upside, that 4,300 in that 50% Fibonacci retracement level. Now, I did say in the last update that we are going to run up against this 38.2 and that could be all she wrote, so to speak, and come back down. You'd have a retest of this bottom right here, and I think that, you could see the markets, people jump in and trade that there for a while, and then ultimately we think odds favor a fail of that retest. And then we can get serious about talking bottoms down here at about 3,500 on the S&P. Right now, though, this is really looking suspicious, right? So right here, this is a very legitimate bear flag pattern. And then if I were to take, the length of that flagpole, you basically go from here. And that would pretty much do the trick right there. So if we really begin to give up the ghost here, we break down through this line right here and then roll over from there. Again, while I think we could get some support right in here, you break through that, and then I think you're going to get a lot of support for this market right here about 3,500 on the S&P 500. On the 1-year daily chart, we still have these, these bullish divergences in place. Okay, so we absolutely found resistance right about that area that I said we could. Big red candle today. So far, you break down below this, you ultimately, going to test this level. Pretty much what I just showed you on the weekly in terms of ranges. But so far, it would be understanding for one to think that maybe this counter trend rally has some more oomph and that we get some buying in here. Of course, that remains to be seen. And then lastly, on our 60-minute, 60-day chart, again, recall we circled that as an area that we'd likely see some buying come in. Sure enough, played out perfectly. We had bullish divergences that continued, as this began to roll over a little bit there. But now we do have a bit of a topping pattern on the hourly chart, and then we were rolling over here on the momentum indicator. So that was a clue that we were going to sell off in here. today. Again, looks to me like there's some potentially solid support right here at 4,000. See, this may still play itself out. We could get a bounce in here. Again, the daily chart suggests that that's very doable. Hourly chart is beginning to draw all that into question. If we don't find meaningful support in here, I do think we'll find it right here around that 3,800 back in this level here, and then we'll see how that plays out. But again, these are bridges that we will cross when we get to them. Ultimately, I still think we're looking at lower lows before this all plays itself out. And of course, all that remains to be seen. We're open-minded to all possibilities. We'll continue to do the work and report to you herein. Hope you folks have a wonderful rest of the day. Talk to you again soon. Bye-bye.